Imagine a digital sky. Trillions of bytes flowing through, well, invisible pipelines, right? Powering everything from your online shopping to these huge AI-driven factories. Today, we're diving into China's cloud computing race. We're exploring how Alibaba, Huawei, and Tencent are really battling it out for dominance, and how they're funding their expansions and basically shaping the future of tech, both in China and increasingly abroad. Our mission here really is to unpack the strategies, the tech, the financing, and the future outlook for these giants. We've pulled together a stack of reports, market analyses, investor insights, basically trying to give you a shortcut to getting truly well-informed on this pretty critical topic.
Yeah, and it's a landscape that's not just massive, it's expanding incredibly fast. That's, the first thing that really strikes you. China's cloud infrastructure spending, it hit, get this, $11.6 billion in just the first quarter of 2025. And if you look ahead, the projections are kind of staggering. The market's set to explode from about $50.5 billion this year, 2025, to over $135.8 billion by 2030. That's a compound annual growth rate, a CAGR of nearly 22%.
Wow, 22% CAGR. That's phenomenal growth. What's driving that? Is it just AI hype, or is there more going on?
It's definitely a mix, but AI-related demand is a huge catalyst, no doubt. But you've also got just aggressive infrastructure expansion happening across the country. And very importantly, there's a clear push from government mandates, digital transformation across almost every sector. Manufacturing, finance, they're all being told, move to the cloud.
Okay, so with that kind of growth, who are the heavyweights in this digital arms race? Who should we be watching?
Well, you've basically got three titans leading the charge: Alibaba Cloud, Huawei Cloud, and Tencent Cloud. As of Q1 2025, Alibaba Cloud is still the biggest player. They hold roughly, let's say, 33 to 36% of the market. Then you've got Huawei Cloud coming in next, around 18%. And Tencent Cloud accounts for about 10%.
Okay, so not quite a three-way tie then. Alibaba's got a pretty significant lead still. But what does that actually mean in practice? Are they all just doing the same thing, or have they carved out, like, specific areas they're good at?
Oh, they've absolutely carved out distinct niches. That's one of the really interesting parts here. Alibaba Cloud, with its market dominance, it really excels in AI and data capabilities. That's a core strength. But the real insight, I think, is its deep ecosystem integration. Think about it. It's the digital backbone for Taobao, Tmall, Alipay, all that e-commerce and fintech stuff. So it leads in infrastructure as a service, INS, and it's really crucial for big companies moving their operations off their own servers.
Right, so if you're already plugged into that whole Alibaba universe, using their cloud is almost a no-brainer, it sounds like. Okay, but what about Huawei? We mostly know them for telecom gear, right? How does that play into the cloud?
That's a great point. Huawei Cloud's strength. It lies firmly in government and industrial sectors. That's their sweet spot. They leverage their own chips, the Ascend AI chips, which are custom designed for AI tasks. And they put a really strong emphasis on robust hybrid cloud solutions and blending public and private clouds. This has created incredible stickiness is the word people use. It makes them almost indispensable in those sectors. It's fascinating, actually, how their telecom background seems to inform their strategy. Reliability, tailored solutions for critical stuff.
Okay, stickiness, we'll have to circle back to that. And Tencent, they're huge in social media and gaming. Does their cloud follow suit?
Precisely. Yeah, Tencent Cloud has really found its niche, focusing on gaming, social apps, and small to medium businesses, the SMEs. They leverage their massive WeChat and QQ ecosystem. That's their unfair advantage, you could say. The cloud services they offer are perfectly tailored for those needs. They really dominate the software as a service, or SaaS, side for gaming and entertainment. It aligns perfectly with their main consumer business. I mean, there are others, like Baidu Cloud, but yeah, these three are undeniably leading the charge.
Okay, so this isn't just about market share. It sounds like a huge infrastructure race. Building all this digital muscle, especially now with AI exploding, that takes serious cash. How are these giants actually funding this aggressive expansion, given the scale we're talking about?
That's absolutely a crucial question. The capital race is intense, and it's pretty strategic. Take Alibaba Cloud. They've strategically raised $3.2 billion. Okay. And they do it through zero-coupon convertible bonds.
Zero-coupon convertible bonds. Okay, for those of us not in finance, break that down. What does that actually mean?
Good question. So essentially, they're debt instruments, bonds, but they don't pay regular interest. That's the zero-coupon part. But the key thing is they give the bondholder the option to convert them into company stock later on at a set price. So it's a way for Alibaba to get cash now without immediately diluting their existing shareholders, and it often signals they're confident their stock price will go up. About 80% of that money is earmarked for expanding data centers, tech upgrades, enhancing cloud services, core stuff. The other 20%, that's aimed at boosting their international e-commerce side. So it's a big strategic bet, really, on both cloud growth and global markets.
Yeah, definitely sounds like a confident play on both fronts. Okay, so what about Huawei then? Given, the whole geopolitical situation, their financing must look quite different.
It does, yeah. Huawei Cloud operates more with an internal investment model. They've also restructured their cloud unit quite a bit. The focus now is heavily on AI-native cloud and these hybrid solutions we mentioned. And their strong partnerships with government entities, well, that often reduces their need for external financing like bonds or big equity raises. Of course, that might mean their growth is tied more to internal cash flow, but those government links can provide a buffer.
Yeah.
They seem particularly focused on meeting AI demand in places like Southeast Asia and Latin America. That's where they're actively expanding.
Right, navigating those restrictions. And Tencent, they clearly have global ambitions too. How are they fueling their expansion?
Tencent Cloud also secured a big chunk of funding. They raised $1.27 billion, but they used dim sum bonds.
Dim sum bonds. Okay, another one. What's the story there?
Yeah. So dim sum bonds are basically bonds issued outside of mainland China, but denominated in Chinese renminbi. It's a strategic way for Chinese companies to tap international money, international investors, but borrow in their own currency. Helps manage currency risk. Their goal, funding digital expansion, bolstering cloud infrastructure, pushing AI initiatives, and just generally optimizing their finances. And they have concrete plans like building new data centers in places like Saudi Arabia and Japan, clearly targeting that international growth.
So it's clear they're all pouring massive resources into this. Okay, but beyond just market size and the money chase, the real fight seems to be in innovation. What kind of tech firepower are these companies actually bringing to the table? What sets them apart?
Oh, the tech battleground is incredibly fierce, especially around AI, edge computing, and these hybrid solutions. So starting with AI and big data. Alibaba Cloud, they boast their own chips, the Hangwang 800, plus advanced AI-driven analytics on their platform. These chips are specifically designed for AI inference, things like image recognition, language processing, making their cloud really efficient for those tasks.
Right, building their own silicon, like we see with Amazon and Google over here. So what's Huawei's angle on AI?
Huawei Cloud leverages its own Ascend AI chips too, but their focus is heavily on industrial AI applications and deep IoT integration. Think smart manufacturing, energy grids, telecom infrastructure. Their strength is really embedding AI into that physical world, into critical industries. Tencent Cloud, meanwhile, uses AI extensively, but more for optimizing things like gaming performance, enhancing social apps like WeChat, and providing tailored AI tools for smaller businesses. Their AI is very much driven by that huge consumer and social ecosystem they have.
Okay, and beyond the big data centers, what about pushing computing power closer to the users? Edge computing and 5G.
Right, edge computing and 5G. Huawei is arguably a leader there, especially for industrial stuff that needs super low latency. Because of their telecom background, they can deploy computing power really close to where data is generated. Think autonomous factories, real-time monitoring. Alibaba offers its own cloud edge nodes, which are more critical for, say, optimizing e-commerce logistics, faster checkouts, quicker delivery tracking, and Tencent, well, predictably, uses edge computing to boost gaming performance. Smooth experiences for their millions of social and entertainment users, minimizing that annoying lag.
Makes sense. And for businesses choosing a platform, are these companies pushing everyone to full public cloud, or are they offering more flexible hybrid models?
When you look at hybrid and cloud-native solutions, Huawei again kind of stands out with its focus on really robust hybrid setups. They're good at seamlessly integrating a company's own servers, private clouds, and the public cloud. That's really appealing to large enterprises or government bodies that already have significant IT infrastructure. Alibaba and Tencent, they offer hybrid options too, but they also place a really strong emphasis on cloud-native development. That means building applications specifically for the cloud from the ground up. That makes their platforms very attractive for startups and companies building modern, scalable apps.
So it sounds like they have great tech, but how do they actually get customers to sign up? And maybe more importantly, how do they make sure those customers stay? This can't just be about the tech itself. It feels like it's about building an ecosystem, creating that stickiness you mentioned earlier.
You're absolutely right. Customer acquisition and stickiness are paramount in such a competitive market. Alibaba Cloud, they target a really broad range, big enterprises, SMEs, startups. They use a mix of tactics, free trials, pretty generous cloud credits, startup incubators. They also showcase impressive AI case studies. But crucially, They leverage that deep ecosystem integration, Taobao, Alipay. If your business is already deeply embedded in the Alibaba ecosystem, choosing their cloud is often the path of least resistance. The stickiness there is incredibly high. It's just hard to untangle yourself.
Yeah, that ecosystem lock-in sounds incredibly powerful. But I wonder, is there a downside to that? Does it maybe limit flexibility if a customer wants to use multiple cloud providers?
That's a very sharp observation. And it's a tension every big cloud provider everywhere faces. For Alibaba, yeah, the lock-in is strong. Customers are heavily invested in their specific tech stack. Now, Huawei Cloud, targeting government, large enterprises, specific industries, they leverage existing telecom contracts, sure. And they offer these comprehensive cloud plus AI plus IoT bundles designed for complex problems. But here's where their stickiness gets really, really interesting. Huawei's true hybrid cloud model. What they actually do is install their public cloud stack directly into the client's own data center.
Wait, hang on. They install their public cloud software inside a client's private data center. How does that even work? That sounds unique.
It is unique, and it's a strategic masterstroke, really. It creates extreme stickiness. We're talking virtual lock-in. Switching becomes incredibly difficult, maybe almost impossible for some government and industrial clients because the entire infrastructure is physically integrated and managed by Huawei on their premises. This isn't just stickiness, it's a move that kind of redefines vendor lock-in, especially for critical national infrastructure. It has huge implications for data sovereignty, national security. It basically creates this digital infrastructure that's incredibly hard to escape. Their stickiness is, well, exceptionally high in those key sectors.
Wow. That's a powerful form of lock-in, all right. So what about Tencent Cloud then? How do they keep customers loyal?
Tencent Cloud, they focus on the SMEs, gaming, entertainment, social app developers. They leverage that massive WeChat and QQ ecosystem. They offer freemium models, SDKs, software development kits, to make it easy to build on their platform. They host hackathons, run accelerator programs for startups. Their stickiness is probably best described as moderate. It's very strong within their consumer niches, especially gaming and social apps, where their ecosystem provides huge advantages. But they don't quite have that same deep enterprise stickiness as Huawei or the broad e-commerce integration of Alibaba. Their strength is really the network effect in social media.
Okay, so it sounds like a market just brimming with opportunity and innovation. But there are always challenges, right? Pressure points. What are some critical things investors or even just users need to keep in mind here, especially around competition and the bigger picture?
Indeed, there are significant pressure points. One major one has been the cloud price war. The Chinese cloud market historically has seen really intense price competition. Alibaba and Tencent especially have repeatedly slashed prices to grab market share. And that has definitely squeezed profit margins.
Right, it feels like they're almost giving it away sometimes. So when do these businesses actually become consistently profitable if they keep cutting prices like that?
That's the multi-billion-dollar question, isn't it? And it connects right to that bigger picture. The intended answer, the strategy, is to shift towards higher margin services, moving beyond just renting out raw computing power, the IaaS layer. They need to push more platform as a service, PaaS, the development tools, databases, and software as a service, and increasingly premium AI services. Those carry much healthier margins.
Okay, that makes sense. Move up the value chain. But are there other players we should be aware of? Is it truly just these three, or is there a wild card maybe?
Well, you absolutely cannot write off Baidu AI Cloud. They're a definite wild card. Yeah, their market share is smaller, maybe around 8%, but they're a significant AI-first player. Baidu is really leveraging its lead in large language models, think ErnieBot, to drive adoption of its cloud services. So for AI-focused startups or enterprises that really need cutting-edge AI in, Baidu Cloud is a very strong niche competitor.
And then there's the whole overlay of regulatory and geopolitical factors. That seems to cast a pretty long shadow over everything in China's tech scene.
Absolutely. Those factors are paramount. You can't ignore them. You've got China's data sovereignty laws, which basically mandate data localization. Data generated in China largely has to stay in China. Strict cybersecurity laws mean complex compliance requirements, especially for enterprise and government clients. That adds cost and complexity. There's also emerging AI regulation, which influences strategy. Companies have to ensure their AI models and how they use data comply with evolving rules around ethics and privacy. And crucially, geopolitical risks, sanctions, chip supply restrictions, trade tensions, those directly hit players like Huawei hardest.
How does that specifically impact Huawei, for example, beyond just making innovation harder?
Well, for Huawei, those chip restrictions, for instance, mean they're forced to invest even more heavily in developing domestic chip alternatives. They have to vertically integrate further. It also pushes them to prioritize certain international markets where they face fewer hurdles, and it makes that on-premises public cloud model even more attractive to them, maybe, as it potentially sidesteps reliance on some global supply chains for certain parts deployed within China. It fundamentally shapes their entire global strategy. It puts them on a very different path compared to Alibaba or Tencent.
It's definitely a multifaceted race with lots of moving parts. So, looking ahead, say, the next 5 years, what's the forecast? Where is this dynamic digital battle heading?
Well, looking ahead, the market growth, as we said, is projected to be really robust, from $50.5 billion this year to potentially $135.8 billion by 2030. We can definitely expect AI cloud adoption to accelerate significantly. That's a key trend. And both hybrid and edge solutions will become even more important as businesses look for more flexibility and computing power closer to where they need it.
And who do you see as the likely winners in this high-stakes game? Or maybe, how do you see their positions evolving?
For overall market leadership, Alibaba Cloud seems likely to hold on to its top spot, mainly due to its diversification and its growing international footprint. Though they really need to keep an eye on improving those margins, successfully making that pivot to higher value services. Huawei Cloud, I think, is poised to really dominate those industrial and government niches. That deep integration, that on-premises public cloud model, it ensures incredibly sticky users. The revenue streams there should be highly resilient, very hard for others to break into. Tencent Cloud, they'll likely remain a strong niche player, especially in gaming and social. But for broader growth, they really need to focus much more aggressively on winning over more enterprise customers beyond their traditional consumer base.
This deep dive into China's cloud computing race. It really paints a fascinating picture, doesn't it? Intense competition, very strategic funding moves, and some truly groundbreaking innovation happening. We've seen how Alibaba, Huawei, and Tencent aren't just building digital plumbing, they're crafting these entire ecosystems designed to pull users in and, well, lock them in from giant companies down to individual developers.
Yeah, and as we think about what's next, it brings up a really interesting question, I think. While these providers are clearly pushing hard for that deep ecosystem lock-in, we're seeing a growing global trend, especially among larger companies, towards multi-cloud strategies, using several providers to avoid being too dependent on just one vendor and for better resilience. So how will China's cloud giants balance their intense pursuit of stickiness, especially Huawei's model, with this potential demand, particularly from large international enterprises for more interoperability, more open standards? It's a fundamental tension, really. And how it plays out will continue to shape the industry. It's definitely something for you as you follow this space to keep a close eye on.
Well, thank you for joining us on this deep dive. We really hope you're now feeling well equipped with some key insights into this crucial, fast moving technological battlefield.